What is the Federal Reserve and how is it that they control the money supply? Well, the Federal Reserve is like a giant piggy bank for all the banks in the United States. The Fed's main job is to regulate and stabilize the economy by controlling the supply of money and credit in the country. But how do they do this? One way is through something called open market operations. The Fed buys and sells special papers called government securities to banks. This helps to control the amount of money in the banks. Other way is through reserve requirements. Banks have to keep some of the money that people deposit into their accounts in the Fed. By changing how much they have to keep, the Fed can control how much money banks have to lend out to people who want to borrow it. The Fed can also control how much banks want to borrow through something called the discount rate. Sometimes banks need to borrow from the Fed and the Fed charges them interest when they borrow. By changing how much interest they charge, the Fed can control how much banks want to borrow. And lastly, interest on reserves.